Hello everyone. In this video, I want to talk again about Wirecard because it really is one of the biggest cases of corporate fraud in German history. And it makes me wonder how such a large fintech company supposedly generating billions of dollars in annual revenue could later reveal that more than $2 billion were likely generated from fake transactions, and that huge quantities of money simply did not exist. To pull off the trick of hiding such massive losses whilst making everyone else believe that the company is some sort of thriving Goliath of the financial technology industry either means that the fraud was incredibly elaborate, or that financial regulators preferred to believe in the trick and therefore failed to do their job and simply look. What's coming out now in the media is that the latter appears to be the case, and some investors are now looking to sue the German regulator BaFin for not spotting this fraud much earlier. But you know, some people did actually spot that the highly successful image portrayed by the company was nothing more than a deception. Investors back as early as 2012 spotted that something didn't smell right about this company, particularly when they started to expand their operations into Asia. John Hempton, a relatively well-known Australian short seller, was one of them. He has built a career on betting against more than 1,000 companies by shorting their stock. He's an investor that has a keen nose for sniffing out corporate frauds and overinflated stock prices. In the case of Wirecard, he first grew suspicious when Wirecard announced the purchase of a payments company in Indonesia during 2012. Now, for a company that generated most of its money from clients in the pornography and gambling industries, he thought that it's hard to play in the mud and not end up at least a little dirty yourself. He therefore proceeded to do what BaFin never did. He looked for the trick. And his investigations led him to firmly believe that the acquisition in Indonesia barely existed, and that Wirecard's profits were overstated. He believed that Wirecard's fake profits were generating further fake cash, which were then spent on yet more fake acquisitions. He shorted the stock early on, and then stood back and watched in amazement and frustration as the fraud continued for the next 8 years. The Financial Times later wrote several pieces highlighting just how dodgy Wirecard was, and other investors soon joined in by setting up short positions of their own. Of course, BaFin not only ignored these signs, they actually suspected short sellers and the Financial Times of spreading lies about Wirecard, all in an effort to manipulate its stock price. In fact, one short seller was even sent to prison for saying critical things about Wirecard, which we now can see were absolutely true. Now, from 2012 to 2020, Wirecard's stock price climbed and continued to attract smaller investors who either were oblivious to the suspicions of fraud or chose to trust BaFin's judgment on the issue, which is an understandable position to take given that BaFin is the financial regulator and overseer of the markets in Germany. We now know, of course, that these investors were eventually blindsided by the collapse of the company into insolvency during June 2020, and that of course many would have suffered substantial losses. But what about John Hempton, who after all got this one right, and was not afraid to call BS by being one of the first to short Wirecard? Well, he actually lost money for similar reasons to other investors. The fraud lasted too long, and in retrospect, he shorted the stock too early. Whilst he made up some of the losses when the company eventually filed for insolvency, it wasn't enough, and despite being right, he also fell victim to BaFin's colossal incompetence and blindness to Wirecard's improprieties. Other well-known short sellers such as Jim Chanos only shorted Wirecard relatively recently in 2019, and is now reported to have made $100 million off the back of the company's scandal going public. Timing, it seems, is everything in short selling. So, overall, despite the trick effected on the regulator and investors by Wirecard being exposed by brave journalists and short sellers many years ago, millions and millions of dollars were still unjustly lost in this scandal. For me, this case highlights even more the importance of thinking for yourself and not going with the crowd, particularly when it comes to investing. Authority figures such as BaFin are not infallible and can and do get things badly wrong. It also reminds me of the risks associated with short selling. Even if you're right, the risk of the fraud going on and prices going up and up, or even that things just never end up being discovered, that risk is always there. The market is an unpredictable beast, and if we are to avoid its strong and vicious bite, we must all take extra care when investing our money, and to always balance the hope of gains with the often underestimated chances of unforeseen losses. Thanks for watching. If you found this video to be helpful, please leave a like and don't forget to hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.